And here we are. It's July 2015 in sunny Subang Jaya. This is grade 12 accounting. I'm Dr. Janicito. I'm the instructor of the course here in the Canadian Pre-University program in Taylor's College. We are now on practice exercise 1-68B. We have in the first the first screencast video, we did 2000X6. Now let's do 2000X7. In order to do that, remember I suggested we construct your own spreadsheet. Rather than working in the confines of this in your textbook, this gives you more flexibility. All right, we always start off with the income statement because the income statement means that there's revenue being generated, or sales, through products and services being sought by the market. We are given here, in the income statement, we have to calculate net income. And how do we do that? Well, first of all, we know that here we are given the income before income taxes, so basically profit or loss. And the formula is always revenues minus the cost of goods sold and other expenses. So let's go. So the best way to do that is we know this is the amount we want and this is the amount, so let's go for it. So if I can do this correctly. And so what we have here is totaling everything here. That's the revenue, $13,850. Now let's calculate the, let's see, where is it? We're now calculating 35% of the income in order to get the taxes. Okay, so taxes are 0.35, 525, and you see automatically the net income comes up, because the net income is the income minus the taxes, and there you have it. Now, if you also notice, this automatically popped up too, because we know that net income is net income no matter where it fits in with this financial statements. So we have, for the statement of changes in equity, well, it's great. You've got the beginning balance. Remember here, the ending balance of 2000X6 is the beginning balance of 2000X7. They bought back shares. So that's something they didn't do here, but they bought back shares. Apple does it. So therefore, if there's dividends to be paid out, well, if you own the shares that's in the company, you don't have to pay it. That's a good thing. And then we see here that the total net income, there it is, net income, and then the dividends were paid out. So this affects the equity. So here we are. What is the ending balance? Let me see if I can calculate that. So basically it is that amount, which is the beginning balance, and then you've got the sum of oops, I'll try that again, sorry. Okay. Sorry, my apologies. It was C11, which is your beginning balance, plus the sum of all this. In other words, you're adding the net income, but you're also subtracting the shares bought and then the dividends. And so the amount here for your ending balance is 5,120. And I'm sorry, this is in euros, but I'm not going to complicate it. So there's your ending balance. Okay, so it's always good to save the spreadsheet as you go along. So now we're at the point where we finished 2 of the financial statements for 2000X7, and now we're going on to the balance sheet and the cash flow statement. It gets a little bit more complicated with the balance sheet and the cash flow statements, but all is not lost. Bon courage, you're going to be just fine. In order to calculate the balance sheet, remember assets equals liabilities and owner's equity. We have been given the total liabilities, and we've also been given shareholders' equity. So let's take a look at what information we have. We're going to plug it in. We're going to remember we're looking at both of these. So there is information that will help us out along both those lines. Actually, see where I'm pausing? 5120, that's the ending balance of the statement of changes in equity. So the ending balance means this is the total equity. And if you look here at shareholders' equity, so the shareholders' equity here says that we have, a certain amount here. This is the sum of the retained earnings and the share capital. So what are the retained earnings? Take a look and see if this is something that you recall from something that we've done. Remember that shareholders' equity, as you can see from the formula, is share capital plus retained earnings. So what are the retained earnings? What is the shareholders' equity? Remember, shareholders' equity is this, the ending balance. So we know this amount, the ending balance, and the shareholders' equity have to be the same. So make it easy. Let's just make it easy. So this amount, beg your pardon, this amount has to be that. So what is the retained earnings? The retained earnings is your total shareholders' equity subtract the share capital of 460. And there you are. There you've got the retained earnings of 4660. Now people have asked, why did the share capital go down? Well, if you remember from here, the company bought back 80 in shares. So 540 and you subtract 80 gives you the 460. So now we know the shareholders' equity. We also know the liabilities. So if we know that, if you add those together, of course, you get liabilities plus a shareholders' equity. So plus this amount, and that is your shareholders' equity. We know that. We know total assets must equal 14,370. We're getting very close. We now are in a position to figure out what is this the current liabilities. We know current liabilities, the total liabilities is the sum of all this. So we know if you take this and then if you subtract these two put together, then you get that sum, which is 4,890 for your current liabilities. There we are. So I'm just going to move this liability so it's there. It just looks a little bit cleaner. We're getting close. We now have to figure out what is cash, and what I'm going to do just so that we need to know this amount. We need to know anything green we need to know. Actually, that's not even pretty green. Let's see if I get, okay, that green. We need to know cash. We need to know other assets. What else do we need to know? We need to know cash provided by operating activities, and we need to know the cash at the end of the year. We're very close. We have only 4 more spaces. Well, it's going to be difficult to figure out cash and other assets if all we know is the amount for PPE, property, plant, and equipment. We do know what it's supposed to add up to. And now we have this, which is net cash provided by operating activities and cash at the end of the year. We are guided by this. We know that there is it looks like there's a decrease in cash. That tells us that this amount, the net cash by operating activities, and this, if we add those all together, we have a decrease in cash. So let's make this work in our favor. Okay, let me just, with this is going to be easy. So we want, what is the amount? C38 minus the sum of these two put together. And rats, let's try that. C38 minus the sum of, let's try this again. C38 minus the sum of these two gives us 710. And that makes sense because we have a decrease in cash. And this is the cash at the beginning of the year. And what is the cash at the end of the year? Now we can figure out the cash at the end of the year. So cash at the beginning of year is $1,265. And subtract the cash at the end of the year, which we don't have. And so therefore that's $1,175. Of course, another way that you could do this is you could do, let me check, plus that. Therefore, it's still the same amount. It's just a different way of doing it. So now we have cash at the beginning of the year. So we have two of these blanks already done. Now, so we have cash at the beginning of the year. And let me see if I can find out how, where is that? There it is. So we know here's the cash. Cash at the end of the year is the same as that. There we are. Now we can figure out the other assets. So we know the other assets is total assets, subtract the sum of cash and plant and equipment, and that should be the amount of 11,095. And I believe if that number is put in, then that all balances. Let's see, does everything balance? Yes. Yes. And now we have finished 2000x7 for question number 68B. It's a practice exercise here at the end of chapter number 1 in accounting grade 12. As you can see, this is mostly arithmetic. Once you understand where everything flows, remember you start off with a transaction, and financial statements are summaries at the end of a certain period of time of the financial transactions. So in this company, the income statement, here's the revenues, and the income before taxes, after you subtract the expenses, and there you have. So one thing that you can notice is in 2006, they had higher revenues, and therefore they also had higher income. So something happened here in year 2000x7. I don't know, maybe marketing didn't do a good job of promoting the product, or maybe there was competition. We don't know. But you can see that's made quite a difference in the net income. Changes in the equity. Well, because they bought back shares, they really didn't have too much to do, and then it looks like they reduced their dividends. So their ending balance is still stronger than it was in 2000x6. About the same. That's not really that much of a difference in the cash in the bank. Total assets have gone up, and what they've done is you can see what's happened here with the retained earnings. But cash at the end of year, they just have less cash. So I hope that this question, although it was a little bit involved, and as I said, although it's mostly arithmetic, it is a good exercise for you to understand how things can work. I think probably the most valuable thing is if you just limit yourself to using the textbook and not using a spreadsheet or pencil and paper and copying it out. I think that there have been studies that have shown that the more you engage with a question, and whether it's copying it out, whether it's translating to a spreadsheet like what I'm doing, that you will just retain more. Anyway, so here we are. That's the end of this part. Now we can go on to the other review exercises. We have, I think, the decision cases. And where are those decision cases? Here we are. There we are. Decision cases, case 1, and then case 2, and then we'll talk about that in class. Thank you.